They went even heavier on Bitcoin, actually trimmed back on Ethereum, and then they started to hold presumably even more altcoins. I would have thought that these guys would have had $50 million in crypto that they've tucked away over the past 8 years, and that thing is now worth $10-20 billion. This one's not adding up in a very big way. I was talking about Coinbase's S1, and Coinbase on the secondary markets was selling its shares for roughly $100 billion valuation at a little bit more than $1 billion in revenue. And they made a few $100 million in profit. Very nice, healthy margin business. But the thing that I was really looking for in their S1 was Coinbase has been more bullish on crypto than anyone. I mean, it's their whole business, crypto. You would think that there was other stuff on the balance sheet that would justify a 100x revenue multiple. If we look at page F31, all the way at the bottom of the S1, it says that as of December 2019, Coinbase was holding about $34 million in crypto. And as of December of 2020, they were holding $316 million of crypto. So it went up a little less than 10x. On page 100, they describe what they're holding. As of December 31st, 2019, Bitcoin, Ethereum, and Tezos represented 44, 12, and 16% of the total crypto assets held. So that was as of December 2019. As of December 31st, 2020, Bitcoin and Ethereum represented 63 and 8%, and we don't know what makes up the other 29%. So they went even heavier on Bitcoin, actually trimmed back on Ethereum, and then they started to hold presumably even more altcoins than they had been prior. So that's interesting. Here's another good nugget. Our crypto assets held are accounted for as intangible assets with indefinite useful lives and are initially measured at cost. Impairment exists when the carrying amount exceeds its fair value, which is measured using the quoted price of the crypto asset at the time its fair value is being measured. We assign cost of transactions on a first in, first out basis. So this is talking about how they value the crypto, right? Because if you spent $33 million on Bitcoin 7 years ago, very different story than spending $33 million on crypto in 2019. You'd still be doing pretty well right now, but also very different ways to think about how you value that asset. Suffice to say, it's actually a little none too inspiring. I would have thought that these guys would have had $50 million in crypto that they've tucked away over the past 8 years, and that thing is now worth, billion, I don't know, what would it be worth now? Like $10-20 billion. And then you'd say, oh, okay, $100 billion sale on the secondary markets for their shares. That's the kind of the effective valuation they got. Okay, yeah. I think they did $1.3 billion in revenue, $100 billion valuation. Again, I'm not saying the numbers make sense, but it would at least help fill in some of the gaps. What are some comps to Coinbase? I mean, it's hard. You could actually look at Robinhood's not public, but the role of Robinhood as a retail trading app for stocks is actually very similar to Coinbase. Just you're trading different stuff. One is stocks, one is crypto. Now, a public company, which actually is much more robust, has a variety of different revenue streams, but also helps traders, both institutional and some retail, trade and has been around forever, is Interactive Brokers. Interactive Brokers has a $32 billion valuation. They got a 30 PE ratio. They're doing about $2 to $2.5 billion in revenue, and they've got a $32 billion valuation. So very nice multiple. Let's call it roughly 15x revenue. You got a 30x PE ratio here, price to earnings ratio. And then you do the math and you just think about the back of the hand napkin math on Coinbase. They would have roughly a 300 PE multiple. if we took the valuation that they had in the secondary markets. And that's where I thought maybe if they had just a boatload of Bitcoin sitting in some, some USB drive somewhere, that would help fill the gap for me because I just wasn't seeing it. And I just still don't see it. I mean, it's an awesome business. They've done a great job. It's not a platform business, just like Robinhood isn't a platform business, just like Interactive Brokers isn't a platform business. Why Interactive Brokers is not in Plaid. They're not actually an investment platform. Whereas the NASDAQ, whereas ICE, which owns the New York Stock Exchange, they are in Plaid. It just, it's just not adding up. I mean, there's a lot of things that aren't adding up, but this one's not adding up in a very big way. We'll see where the pricing actually comes out when the shares go public. Not to say that they would go at $100 billion. Not sure who on the secondary market said, yeah, let me buy these at $100 billion valuation. But yeah, I guess, crazier things have happened. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.